I've got a great technical analysis tool for you here. You may or may not have heard of it. It's called the Central Pivot Range. It's a derivative of the pivot point. It's a fantastic tool, support and resistance, trade management, strategy, longer term, shorter term. I'm going to take you through what it is and give you some trading ideas and strategies for you to go away and hopefully apply successfully into your world of trading. So with that, let's get stuck into that analysis. Pivot points by themselves are a fantastic tool. They're very popular in the world of day trading, FX, the more liquid markets. But there are many derivatives of the pivot, and one of those is known as the Central Pivot Range. I really like this one. It gives a slightly different angle, a set of rules that you can use, especially in day trading and for that matter in the longer term. And let's firstly have a look at the difference between the standard pivot that you might be used to or familiar with versus this central pivot range I'm going to abbreviate as the CPR. Now you can see here the traditional pivot set up on the left and the CPR on the right, and you'll notice that the main difference are those two bold solid red lines on the CPR there on the right, the TC and the BC lines. That creates a range around that central pivot, the P line there. Now I'm going to call those two new lines the TC, that's the top central line, and the BC, the bottom central line. Now how are they calculated? Well, let's start with the calculation of the main pivot line. Remember, that's the high plus the low plus the close divided by 3. That gives you that central starting point. Now the TC, the top central level, is the pivot minus the BC plus the pivot, and the bottom central level, the BC, that is high low divided by 2, and that's going to give you those bands that range around the central pivot line. What is this trying to tell us? Well, it translates quite simply as that range, the TC to the BC, is important for predicting future price movement. It's a sentiment tool that you can use, like I say, to gauge where the price may be heading next. Here's a very quick example using GBP USD, the FX pair, on a 15-minute chart window. Now you can see those three dashed white lines. The central one is the pivot point, and the one above and one below, that's the BC and the TC line. And we're going to work out how we dissect and translate what that's telling us in a minute. As you might have seen or guessed from that example we looked at on GBP USD, that these CPR lines are very good at highlighting strong support and resistance zones. Now statistically there's about 30-40% chance of the price not touching the CPR zone in that time period being analysed. And we can see in this example using WTI crude oil how that price, in this downward trend, using the bottom of the bands there to hold and bounce off downward. So very critical tool for understanding support and resistance. So a bit more detail on the rules. CPR width, does that tell us anything? Well, yes it does. If it's narrow, it signifies a trending market, and if that CPR, those top and bottom lines from the pivot point, the BC and the TC, are wide, that indicates more of a ranging sideways market. And here's something what's known as the ladder. It can be bullish or bearish. If you see it in an upward trend like you see here on this example, I think this is CAD JPY, another FX pair, that indicates a strong bullish trend, and vice versa. The downside, if you see it going downwards, then that would be more bearish trend for that market. We've also got something called the Virgin CPR. Previous day's CPR, if not touched by the price, is very strong support resistance zone. I'm going to show you in a minute what that looks like, and often prices can bounce from these levels. So here's an example using the Chinese A50 stock market. You can see in the middle there where the price, the Virgin CPR zone is created, but notice how the next day the price pulls back and funnily enough uses the previous day's band range there on the pivots as the support zone for before bouncing on off upwards in the shorter term trend direction. So now let's look how we can find these CPRs on a chart. I'm going to use TradingView as the example. It's going to be on other packages out there as well. You just maybe have to do a bit of digging around, but just for this video I'm going to use TradingView. Now we've got that WTI crude oil example in front of us. You can see the CPR on there already, but how did I get that? Well, I went up to indicators. Now there's plenty of central pivot range tools that you can use inside TradingView. You just have to type central pivot range and you can see a nice drop down presenting itself of many different variants. You know, by all means have a play, but I use this one called CPR by KGS. Now if you type that in there, you click on that, it's going to pull back what I had. Now if we explore that a bit further, go into the settings, and why I like this one is it allows you to flick between weekly, monthly, daily pivots, different variables, so it allows you to turn this into a multi-time frame type strategy, whereas some just are set to the daily ones, which for good for day trading. If we want something a bit longer term, we might want the weekly or the monthly pivots. Now we can play around with the styles and the colors and what they all, you know, set up as in this box here, and just flick between the two. Now on this example we've got crude oil on 1 hour chart and we've got the daily pivots showing. You can add the others, tomorrow's pivot lines on there, previous high lows, all that sort of thing. Play around and there's plenty enough for you to come up with your own strategies and ideas, but that is really quickly how you can get it on to your charts on TradingView. Now trading CPR, it works very nicely I think on all time frames, and we'll have a look at some examples in a minute of some strategies that you could start to develop, and works very nicely across most markets, but I do prefer those with more liquidity. I find these pivots and just the standard pivot points work better in the more liquid markets, and often if I go into higher time frames I start to flip out into the Fibonacci world anyway. But like I said, very good across the board, and I think very good for sort of breakout, reversal, pullback and bounce type strategies. Seeing a success rate between 60 to 70%, but you do need a well-defined trade management process, you know, around the risk and return numbers you're going to get on this strategy to make it work. So, you know, 1.5, 2 to 1 maybe start with, to have a look at how you can build that into trading this type of system, and I'm going to show you how I get to those risk return numbers in a minute with some of the strategy ideas I've got. So with that, let's actually take a look now at some day trading and longer term trading strategy examples. So I'm going to start with a longer term sort of strategy. Gold futures on the chart here, it's a daily chart. What indicators have I added? Well, down the bottom here you can see this is the DMI, it's modified DMI. We right click onto that, go into the settings, you can see that I've dropped the ADX, just got it as a longer term 30 period, and all I'm really looking out for here is the cross of the positive and the minus. You've got the green above the red there, that's bullish to me, and that's going to help me with the trend filtering direction on the above. Now I've also added on standard pivots, and we go into those settings, you can see I've actually set them to monthly, so they're longer term. So, and it's a classic pivot setup. So to me these are quite significant price points. Now what are we looking for around the CPR? Well, it's a breakout strategy. Now if we've got bullishness here, we've got the price breaking out the CPR, then this is where I'm going to start going in. I'm not going to wait for the bar to close. You can do if you're more conservative, but I don't. And we go in. Where do we put our stop loss? Where we can put it at the underneath of the CPR. And our targets, well, that's where I use these pivot points to get in on the action. You can see here the first one, the second one, and look how the price plays around these pivot points as well. It's a great tool to overlay, and what I do is I trail the stop up so I can let it run up through those pivot points. So that is a real basic longer term daily strategy, and it's very similar for the day trading view when we go down into the lower time frames. So this is an example in FX world, low time frame. Now here I've got a currency strength filter, so I'm not just going to focus in on one pair in particular. I'm going to find what's strong and weak. Now, quick analysis, I'm not going to go into this too heavily at the moment. It's going to tell me that CAD's been trending down quite a lot and JPY is on the up. So I'm going to put CAD JPY together, then I'm going to go and find that chart in the smaller time frames. And then it's the same approach. I've got a 15-minute chart here, got the DMI on the bottom, and then what I'm looking for, again, I've got the pivots as potential targets, and I've set them to daily rather than monthly that we had, and the CPR is set to daily as well. So, and you can see a nice tight range there, so I'm looking for a breakout. Now, some people wait for the breakout and the pullback and then the reversal. I'm a bit more aggressive. You can use these pivots as potential targets or part of. Again, stop loss, you've got to be a bit more wary of volatility when you're moving down into the lower time frame. So what I sometimes do here is actually change the use the higher time frame, so maybe an hour time frame with the CPR numbers, which would give me a stop loss maybe more in, say, this zone here rather than being taken out by just putting it above here. You can create your own stop loss rules around it, but what I'm doing here is waiting for, again, the breakout and then that trend, you know, hitting all the way down, and then I look at my risk return to the win-loss ratios to work out maybe I might want a 1.5 to 1 on that trade, or I might be targeting the pivots or the previous day's pivots as potential target. As you can see there very nicely, that stopped at yesterday's pivot line there, and really very similar to the longer term strategy. We've got the trend change as well. There you can see the negative bearishness coming in to there. You might want to speed that up. It's all ideas that I'm throwing at you here to create your own strategies around these ideas. Probably just want it a bit faster, maybe take it back to the standard default of 14. That actually moves it on there. Don't backfit the data. Test it over different currency pairs markets to see how it works for you. But this is how you can use that CPR, and then remember the use of that CPR is in its support and resistance functionality. See how that price pulled back and got stuck in that zone, you know, there, didn't want to go on upwards there, and then reversed on backwards. You can use all this information. It's telling you an awful lot about what's going on with the price. So longer term, shorter term, similar setup, but it's an idea for you to work on and take away and make your own. So there you go, something else for you to work into your trading. Giving you a few ideas there of how to use a derivative of the pivot point, and the CPR is a really good one. It gives you that starting day range. It can be very good in day trading, the longer term, many possibilities for you there. Now I hope you find it useful, and if you want to find out other trading ideas, strategies, want to improve your trading, then I've got a great playlist called the Ultimate Trading Course. Dig in, you'll find out a lot of useful information within that. So here it is.